G'day folks, welcome to another weekly update for the 2nd of April. So this is the general update. There is a more specific one coming for members. The US market now has really confirmed that it's heading back up, and we should always take the opportunity to look on a weekly chart or even sometimes a monthly chart just to get a bigger picture perspective of what's going on. And despite all the pretty ordinary news that's out there at the moment, if you want to go and look for it, with Libya and other countries in North Africa and the Middle East, with Portugal and Ireland and Greek debt problems, with Japan, you name it. There's a whole bunch of things out there, but at the end of the day, the market has momentum heading upwards, and that's really all that matters. So let's just have a look at some of the bigger picture charts. First of all, just a reminder, this is general advice only, presented under the Licence of Financial Services of Australia. So these views are mine only, and they're not intended to be trading recommendations. So you need to make up your own mind about what trading you're going to take. So let's just have a quick look at the overnight action and looking at last week as a whole. The S&P continues to advance very strongly, as I indicated last week when it closed above the 1310 mark. To me, 1344 is next, and we'll have a look at why that is on the daily chart. And I really think now that 1450 is a very strong probability, and possibly even 1550 as well, although it may take a little while to get to that level. The Aussie indices will follow. Up to date, they've been following at about half the rate of increase that the American markets have been going at. I suspect, though, that there just seem to be some signs now that the Australian market is starting to come back into favour a little bit. I think the fear of commodity prices falling over has gone, and so there's a lot of money coming back into the Australian market now. Precious metals are poised, that should read, to break higher, and especially silver. It's outperforming gold by a long way. Copper's consolidating under its resistance level, but a break above 450, 455 will be very positive for copper. Oil continues to move higher on the issues in the Middle East, and was 2.4% higher for the week, trading around about $107 a barrel. The Small Ordinaries Index is showing great strength again. It was a little volatile over the couple of weeks of the correction, but it's very strong. And the Aussie dollar is closing in on $1.04, and $1.10 looks very likely to me as the Fed goes about trashing the US dollar. So let's have a look at the S&P. So first of all, I want to take a look at a monthly chart. So we're looking here at the period that starts in 1995. So you're looking there at 16 years of S&P 500. This red moving average is the 30-month moving average, and the blue one is the 20-month moving average. So a couple of things that we can note here, that if we take the run down from the peak in October of 07 to the bottom of the crash in 08, or in fact March of 09, we put our retracement levels on that, then the market initially ran up to exactly 61.8% of that decline, just within a couple of points. So that was perfect symmetry. It then declined from that peak to here. So if we put a retracement on this leg from here up to here, the 38.2% retracement, in other words, that first retracement level was at 1007. The market, the S&P, declined to 1010. So again, almost spot on. In fact, this was actually 667. So yeah, exactly to the point. 1010 was the first retracement level, and that's exactly where it went to. So the fact that it only pulled back to that first retracement level and has now pushed higher is an indication of strength, compared to if it had, let's say, pulled back to this 944 level or even lower. So that tells us this strength. We've now pushed up above this previous top here at 12.19 and basically went straight through it without a pause. Well, there was a little pause, I beg your pardon, in November of 2010. So let's zero in a little more closely. So we did run up to it again, formed another medium-term double top, closed on the low for the month, but now it's just accelerated away. This is the correction, all contained within the month of March, and so we're heading, to me, we're now in basically clear air, and we're heading to at least this 1450 mark, I believe, and it's possible, given the strength of this trend, that we could run fairly smartly all the way to 1550, 1570 area. So there's no question in my mind that when you look at it on a big picture view, the S&P is behaving according to the technical levels just superbly. A 2/3 retracement up to here, then a 1/3 retracement back of this leg, and then straight off again. There's real strength here. So that one's looking very solid indeed. So let's just look at the daily chart, and you can see I was looking for a break of this little inclined trend line down here, which we got last week. So we're now pushing up towards these highs. The 50-day is well above the 150-day, both of which are inclined fairly steeply, so that tells you how much strength there is in the market. So let's look at our indices now. And this is the ASX 200, and we had a very strong trend channel going until we broke out of it in the correction, but we've very quickly rebounded. We did get down to oversold down here. The previous time that we were at such a level was in May, June of last year. So whilst we've not gone above old highs like we did in the US, we are still progressing fairly steeply out of this correction a couple of weeks ago. So for me, we'll probably encounter a little bit of resistance around 49.50, but 5,000 and beyond, particularly if the US goes to where I think it will, is of course absolutely on the cards. Now let's look at the materials index, but we'll look at this on a weekly view. And you can see materials has been, this is the GFC through here, and has been in a very, very strong uptrend. We had a bit of a pause for about 6 months during 2010 in the materials index, but basically it's been in a very, very strong uptrend. And that looks set to continue perhaps all the way to above 17,000 points. Finance index looked at on a weekly view, nowhere near as attractive as the materials. This is the GFC. We rebounded as the materials index did, but it's basically gone flat. So the banks in Australia have done nothing since August of 2009. So that's in excess of 18 months now, getting up towards 20 months. So really, really stark difference in performance. And let's look at the energy index on a weekly chart. Here's the GFC. Again, sharp move back up out of there, but basically the energy index has also done nothing since about October of 2009, but certainly showing some fairly positive signs. We can see really just broke above this level through here, through last week. So the energy index also looking very strong. And finally, we'll take a look at the small ordinaries on a weekly view, and there's our GFC. We really started to pull out of that in March of 2009, and again, other than a bit of a sideways period through the middle of 2010, it's been pretty strong. We did get a little bit of a deeper correction percentage-wise, but you'd expect that with small stocks compared to the main large stocks. But we've come out of it pretty quickly. We got down to 25.50 on the index, but now we've gone up 300 points in just the last 3 weeks. So everything looking very strong in that area as well. let's have a look at gold, and I'll put gold on a weekly view. So you can see here, here's the 30-week moving average, which gold has basically been tracking since November of 08. And there's the bigger picture move from down in 2001 when this whole move started. So you can see gold showing absolutely no signs of going sideways, and that is a strong trend. But I can tell you, and it's poised to break out, but I can tell you that the silver trend in the last 6 to 8 months has been even stronger. And you can see that's where we finished on Friday night. Basically, that's an all-time high close since the 1980s. Closed at 37.73. So we'll look at that on a weekly chart, and you can see that's an incredibly strong trend. So silver now has gone, you remember how far above the 30-week moving average that gold was. It was only about here. Silver is way above it. So it's an incredibly powerful trend unfolding with silver. And one of the ways we can tell that is if we put our retracement on there. Then it also only got back to this 38.2 before taking off again. So I'm looking for silver in the shorter term between probably $38 and $44, somewhere in that range. But I think longer term we're looking at silver $100 plus an ounce is by no means out of the question on silver. Okay, so let's have a look at some of the other charts. And here's a chart of the London Metals Exchange copper warehouse. You can see that copper has been building stocks back up again, but it's just starting to level off in the last few weeks. And that's why the copper price has remained quite strong. So we haven't had the dip here that I would have expected. So that's the 1-year copper price. Let's look at nickel. We had a build-up in reserves after a big fall, but now it's declining again. And as a result, the nickel price has remained quite strong around about $12 a pound. And one of the things that is worth remembering is, and one of the reasons that our market has lagged, is because analyst forecasts for long-term commodity prices are well below the current levels, in some cases half the current levels in the case of copper. I've seen some long-range analyst forecasts at $2.25 to $2.50 a pound for copper, which is currently at $4.50 a pound. I think looking at the supply-demand situation, it just does not hold water at all. So I think over time you're going to see analysts upgrading their estimates for commodity prices, and that's really going to feed through to the miners even more strongly. Here's the tin price, which has basically doubled since the middle of last year, from around 16,000 a tonne to 32,000 a tonne. So tin remaining very strong. And so just to finish, to summarise where we're at, I would estimate that or recommend that somewhere around about 80% of maximum exposure is appropriate now. I'd still like to keep a little bit of money up your sleeve and be looking to buy the dips, because we are in the third year of a bull market. So we're looking to buy quality resource projects, not the rubbish, but quality projects. Emerging projects is still where the money is, but we need to buy the dips. Larger stocks are going to come into their own a bit more this year, and if you look at AWC, BHP, Woodside, have all done quite well in the last week or two. And finally, I'm also looking to short sell the retailers. Trading conditions remain extremely hard as consumers have got less and less disposable income. So looking for short selling opportunities in the retailers. So that's it for this week. We'll talk again next week. Cheers.